Hi, morning, folks, and happy hump day to everyone. Hope everyone's doing all right, and having a decent start of the week. Basically, I was just seeing the euro getting hit here for a bit, but I'm not going to be touching on that really. Staying away from the euro for the time being. So, what is on the docket today includes, well, basically the DOE numbers. Before the DOE, we do have US retail sales, UK producer inflation came in, a level that is the highest in over 42 years. So I suspect we might see basically, pushing the Bank of England to further hike rates to control this, which is why, we are because the euro and the sterling, quite strongly correlated to each other. Part of it is why we're seeing this drop on the euro today. Yeah, the euro just weakening, and at the same time, looking at the strength of the dollar going into the FOMC minutes, a lot later today. Um, but in terms of chart management, I mean, look at this, just beautiful stuff happening here on crude. We are touching this prior inflection over here. This is March lows. Yep, March lows double bottom held twice. Now we've got the third test over here, so about $86 there and thereabouts on WTI front month futures. Why is this holding, and why are we seeing a bit of a bid going into days? Because we had a bigger build than expected on the API, American Petroleum Institute, uh, stockpile figures. So that came in at about 450,000 barrels build, from an expected 117,000 build from a prior, draw, 450 million draw from an expected 117,000 draw from a prior to 0.156 million build last week. And this goes to show at the same time we do have headline figure the US crude stockpile, sorry, US crude weekly inventories of the DOE is expected to come in at a draw of 275,000 barrels against a prior build of 5.458 million, which is so if we are seeing this shrink, we might see crude just going back to test a $90 handle really. Because apart from thinking, okay, maybe there might be a global recession, that we are heading into, shrinking stockpiles does, kind of tell you that, okay, maybe demand destruction might not be as serious as we might have thought really going into the end of the quarter and also Q1 next year. If inflation remains pretty much controlled, we might see that cut that everyone's kind of looking for in Q1 from the FOMC. But the FOMC minutes later today will be key to a lot of this decision making. That is pretty much it from me. To head over to the Dogen Capital Discord room where we are running that 1 month free trial. Any questions that all, just hit me up in there. And also on this YouTube channel, which you should be subscribed to and follow and like, too. It really helps us a lot in terms of, keeping the, content wise, going forward. Anyways, have a good hump day ahead and a brilliant rest of the week. Cheers.